Right now, Bitcoin is trading in the $60,000. So, when I tell you that a major Wall Street investment firm has a real published price target of $1.5 million per coin within the next few years, that might sound like clickbait. It's not. This isn't a rumor from social media. It's a modeled forecast from analysts who manage billions of dollars for a living. Quick disclaimer: I'm not a financial advisor. This isn't financial advice, and Bitcoin is extremely volatile. Always do your own research before investing. Okay, here are the three real reasons this target exists. Reason number one: institutional adoption. For most of Bitcoin's history, it was considered too risky and too unregulated for big institutions, pension funds, banks, wealth managers to touch. Legally, many of them simply weren't allowed to hold it. That changed in January 2024 when the SEC approved spot Bitcoin ETFs. Overnight, Bitcoin became a brand new regulated asset class. Giant firms like BlackRock could now offer Bitcoin exposure through a familiar product, traded just like a stock. And investors showed up. BlackRock's Bitcoin ETF alone has pulled in more than $60 billion since it launched in 2024, one of the most successful ETF launches ever. That's institutional money that legally couldn't touch Bitcoin before. Here's the part most people miss: Bitcoin's price isn't just driven by retail traders anymore, it's now competing for a slice of the same multi-trillion-dollar pool of money that flows into stocks, bonds, and gold. A pool that's far bigger than the entire crypto market combined. Reason number two: scarcity. Bitcoin as digital gold. This one's written directly into Bitcoin's code. There will only ever be 21 million coins. Ever. Not 21 million and one. We've already crossed 20 million mined, which means fewer than 1 million Bitcoin are left to ever be created, trickling out slowly over the next 100 plus years. No government and no central bank can print more of it. Compare that to the dollar, the euro, or the peso, where new money gets created all the time. That fixed, math guaranteed scarcity is exactly why younger investors call Bitcoin digital gold. It shares gold's core property. Nobody can just make more of it, but it solves gold's biggest headache. You don't need a vault, a security team, or an assay office to prove it's real. You can verify your holdings and send them anywhere on Earth in minutes using nothing but your phone. For a generation that grew up doing everything online, that's a massive upgrade over bars of metal sitting in a basement. Reason number three: global currency insurance. This one isn't about speculation, it's about survival. In countries like Argentina and Turkey, inflation has run above 30% a year in recent times. Imagine working all month, and by the time you get paid, your money already buys noticeably less than it did 4 weeks earlier. That's daily life for millions of people. So they look for somewhere to park their savings that their own government can't quietly devalue. Some buy dollars, but increasingly, many are turning to Bitcoin because, unlike cash under a mattress, it can't be frozen, seized, or printed into oblivion by a struggling central bank. It's become a kind of insurance policy, a way to protect a life's worth of savings from a currency that's losing value by the week. And this isn't some tiny niche. It's happening across dozens of developing economies at once. And every one of those individual decisions adds up to real organic demand for Bitcoin that has nothing to do with US trading charts. So, to recap, institutional money is now legally allowed in, the supply is mathematically capped, and global demand is growing out of necessity, not hype. But here's the honest math: Bitcoin is trading in the $60,000 today. To hit 1.5 million in 4 years, it would need to grow by more than 100% every single year, 4 years in a row. That's a massive bar, bigger than almost any 4-year run in Bitcoin's history. Is it possible? These firms think so. Is it guaranteed? Absolutely not. So, I want to know, do you think Bitcoin actually gets there? Drop your prediction in the comments below.